Old money versus new money, insurance edition.
Drives the Lamborghini.
Definitely new money. It's crypto money. New money, old money, they wouldn't buy a Lamborghini.
Buys a high limit umbrella policy.
I'm going to go with old money. Why? Because life experiences. They know what can happen if you don't have high limits on insurance.
Insures art.
Old money. Definitely old money. A lot of younger people, I don't think they're into art as much. And remember, you got to get a special insurance policy, a floater for art. It's got to get appraised and you got to list it on your policy. It's not covered under your traditional homeowner's policy.
Uses insurance to build wealth.
Oof, that's a tough one. I'm going to go new money. I do know that a lot of people like to use insurance policies like IULs in order to help fund some of the real estate transactions, and that's a pretty hip thing. So I'm going to go new money, although there are some old money people that also do it.
Always trying to sue everybody.
Old money and new money. Everyone tries to sue everybody. That's unfortunate, but true.
Shows off Rolexes on social media platforms and that ends up getting it stolen.
Definitely new money. Recently happened on Rodeo Drive in Beverly Hills where some influencer had a big thick gold chain and a fancy watch and he got ripped off.
Basically gets the cheapest policy every single time.
Oof. New money is always trying to get the cheapest type of policy.
Worried about estate protection for future generations versus if their landlord covers their own stuff.
I am definitely going old money on that. New money, they haven't built up enough wealth yet and they don't appreciate insurance enough. So I'm going old money on that one.
Higher deductibles.
Old money. Old money understands insurance and understands it's for large losses. Therefore, they're going to go with a higher deductible. They know over time they're going to save a decent amount of money. New money will go with the lower deductible, which we don't recommend.
We've had the same family broker for 20 years. Who says that?
Old money. New money, too young. They haven't had the experience yet, and they probably don't have a relationship with a broker.
Reviewing yearly on their coverage versus never audits.
Definitely going to be old money. They're going to want to go through their policy in detail and make sure everything's accurate. I'm going to go old money when it comes to reviewing insurance policies on an annual basis.
Old money or new money knows what FEMA is.
I'm going to go both due to all the catastrophic losses we've had. Old money or new money appreciates a relationship that they have with their broker. I think old money, they appreciate a relationship with an insurance agent. They're more emotional than young money. Young money, I think, is more analytical. They just want the numbers and they want to get in and out and get back on Instagram or TikTok and watch videos of me. So they do not care that much about spending time and being loyal to their agent. It's just very analytical.